Good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a senior manager and coach with Charles Schwab, and today we are going to look at a whole bunch of stocks. I am in San Diego getting ready for the market drive, which is coming to you tomorrow. If you're in the San Diego area and you haven't registered, if the registration is closed, you can always come and we can sign you up on site. If you regularly attend these classes, or even if you just occasionally attend, please come up and introduce yourself. I would love to meet you. So today, what are we going to talk about? Well, we're going to look at bullish strategies today in bullish sectors with bullish stocks. We're going to review 2 trades that have hit targets. And then we are going to place, 4 or 5 new trades, depending on what time and conversation will allow. As many of you know, I'm a big fan of Sesame Street, so I say that this class is brought to you by the numbers 2 and 4 because we're reviewing 2 trades and placing 4 or 5 new ones and the letters A, F, N, and S, and possibly C. So without further ado, let's get into it. So we're just really looking at strategies that can take advantage of bullish movements in the market. And so that's kind of today's theme. So just before we get going and get into the thick of things, remember that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges and option trades today. But, when you apply, not all will qualify for all levels. We use the Paper Money software application on the Thinkorswim. And that is a brilliant place to learn, to hone your skills, to make sure you have a trading plan, have a plan, trade your plan, that you understand your plan, and that you understand the mechanics of how to use the platform. One of the differences with Paper Money is that short options will never be assigned early. That can happen in a live account, just so you know. So we're going to do a super quick market overview. 4 days a week, there is a Trader Talks webcast to open the trading day. And that gives you a really in-depth, view into everything that's going on. On Friday, they discuss ETFs. And so that one isn't recorded, but I do a very quick overview because such a detailed overview is done to start the day. We're going to manage, or actually we're going to review a couple of existing trades and then focus on placing several new example trades. So that's kind of what's on the menu. So let's come out and have a quick look at the platform. CVX might be one of the ones on the menu. But when we look at the S&P 500, and this is a 3-month chart, so let's, this has been uptrending, right? Like, it's hard to call it other than that, although we're seeing maybe some consolidation happening and a bit of a panic pattern. It's currently appears to be bouncing off a support level. So that's what's happening with our S&P 500. But when we, there's been a lot of up and down to create this panic pattern, and we'll just have to see how it plays out. But today, looks like it's bouncing off a support level. When we look at our NASDAQ, which is our tech-heavy index, this line looks a little flatter, doesn't it? But if we come out to, a 1-year chart on below patterns and show as a still seeing in the last 12 months, this index, pardon my drawing tools here, this index is still up over 20% in the last 12 months. So, that is not shabby. And how about our small caps? Well, they too, even though they're forming a bit of a panic pattern right now, and they're coming to the level, they too are up almost 23%. And, not let the S&P 500 left out. It's actually in 3rd place, being up 17%.
All righty, guys, can you hear me better now? So just go ahead and type into the chat if you can hear me A-okay. Yeah. We're not going to talk about the U.S. Olympic hockey game today because apparently that game is under review. And no, I'm not pranking you. Okay, so I don't want to waste any more time. Let's move on, from the review. Okay. Okay. So everybody can hear me. Yay! All right. So on the 25th, we exited 2 positions. So one of them was SanDisk. Okay, everybody's saying the sound is much better. Yay. We have such an excellent team behind the scenes. I can't even begin to tell you. So I'm going to change this back to price. And seeing as we do a lot of short-term trading, if you're new to this class, feel free to type a greeting into the chat. Our goal in this class was to make $200 a week this year, which is pretty aggressive on an account that started with $25,000. And we're currently at 31,200, which means, we're up about 25%. And the reason I'm mentioning this is that, like, by the end of the year, we might not gain any more. Like, that's possible. Or we could even end up down a bit. But one of the challenges can be with our own mind when we've had a lot of success within a short period of time. That, like, then you start having this conversation in your head that, like, hey, you know what? This position sizing stuff is for mere mortals, and obviously we are brilliant, and so we should be taking more risk because we could have made even more money. And I caution you to go, like, wash out your brain with soap if you start thinking that, because that's when you start position sizing inappropriately, and then there's some major thing that hits the market, and you have 10 trades in a row go bad, and all of a sudden that 25% gain is gone, and all of a sudden you're down 25%. So we have these rules for a reason, and we're looking for base hits. Okay, so I'm going to get off my pedestal now. But, with SanDisk, we placed 2 trades back here on the 19th. And we did a long call vertical with a 630. We bought the 630, sold the 640. That hit our target. And we also did a swing target, and we bought a few shares of stock. Now, we didn't buy very many. It's like 6 whole shares. So when we come and we look at SanDisk, we're up a whole whopping $74, 2% on our 6 shares of stock. Okay, but, it's percolating, so we're just going to let it continue to percolate. When we look at our SanDisk, we got in for 470, out for 825. And so, and the goal was to make a 50% return. Now, this could have ended up being what we call a paper money fill, because let me just move this over here. We made more than the 50% we were going for. So if we take this 825 and we subtract the 740, we made 355. And how much were we risking? We were risking 470, and we could have lost all of it. And so our return on risk on this was about 75%. And so making, 355, we're looking for base hits. I would call that a double. Because often we're making 150, 175 kind of thing. So, our return on risk was higher than what we were aiming for. And in a live account, it may not have ended up being out at that rate. I'm not sure. But regardless, this was just an example, and we're out of that trade now. Okay, so that was SanDisk. And then the other trade, the stock trade, we're just going to let it continue to percolate. And why did we place this trade? Because we had a pattern setting up, and on this day we saw a breakout. And then it's kind of just been kind of rolling along, continuing to use that 10-day moving average as a, as a support level. And if you have not hit your target on this, then you might want to, you may just want to leave it in your account and let it continue to mosey along, because there's no sign that this uptrend is complete. and it's trading above that 640 level, which is, you know, as long as it stays above there, then it should eventually meet our target. Okay? Okay. We are going to look at Netflix on Monday. Okay? We'll look at Netflix Monday. We're almost at our max loss on Netflix. We placed a bearish trade, and that did not, and then Netflix immediately started taking off. But we'll look at that one Monday because I have some new trades that we want to put on. So with SanDisk, if we're not, you know, in this case, we're out of this trade. And so sometimes what we might do is a wash, rinse, repeat, which means could we come in and say, hey, this is still uptrending. It's now at 648. So could we sell the 645 and, you know, and buy the 650? Now, when I looked at this earlier, you know, it was trading above 650. Well, so let's look. Well, you know, it's kind of pulling back now. It was, whoops. When I looked at this earlier, it was actually up on the day. So let's move on from SanDisk. The other one, so we'll wait and we'll look at that one again on Monday. The other one that hit a target was FCX. And so we did another swing trade. Remember, we're doing a lot of shorter term trades. And so if we look at FCX, I'm guessing we got in probably here when it broke out, and we had a swing target of $69, and we ended up out of that one at $69.01. We bought 78 shares. So if we come to our monitor tab and we type in CX, and type honest I can. So we got in at 63.82, and then we got out, and that was on the 9th. Oh, so we got in that one a little while ago, and we got out at 69.01. So let me just over and bring up my calculator. I don't have my regular setup here in San Diego. So 69.01 minus 63.82. So we made $5.19 a share times 78 shares. So on this, we made $404.82. Again, like, this is a $25,000 account. Like, that's huge for us. You know, like, if you look at that divided by 25,000, which is what we started out with, that's a 1.6%, the equivalent of a 1.6% return on our entire starting portfolio. So not too shabby. Or if you look at it, you know, if we made $5.19 a share and we paid $63.82 a share, our return on investment was 8%, and we weren't even in this for a month. You know, we were in this from the 9th to the 25th. Now, the call that we were going to compare it to, we were in for, you know, less time, and we ended up stopped out on that, and on the call, we ended up losing money. And so, you know, sometimes people will say, if it's been a successful call trade, they'll say, well, obviously calls are the way to go. But in this case, we made a really nice return on the stock because we had more time. And when the stock pulled back, we were out with a 50% loss on the call. Do you see that? Because we bought it for $370 and then we got stopped out for $184. And both of these trades we placed on the 9th. So we placed them on this day. And so that's kind of an interesting way of looking at it. And it's not very often that it happens where we have one trade that, you know, absolutely loses money. And I'm guessing this is the 17th. Yeah, we got stopped out on this day on the call. And we lost money on that one. And then it came up and it hit our target here. And we made money on this one. So, there isn't one trading strategy that works better all the time. Is kind of the lesson that this one is showing us, right? Right. Okay, so let's kind of look at a little gold mining stock. As many of you know, gold has just been the talk of the town. Yeah, so Mike is saying you win some and you lose some, but you know what? And that's true. But you know what? Like when we lost some, we lost about $180 on that, and so it was a flesh wound. It didn't annihilate our account because we position sized properly. Okay, so that's important. So on AU, we've placed several trades on AU, and we still have a position. So here was our one ATR target for the call. We talked about that. We placed that trade last Friday. It hit our target on Monday. We talked about not being greedy and being happy with that return. Had we stayed in with that call, there would have been more money to be made. We also bought shares of stock, and it came up to 128.54. Our target's 130, and we haven't quite hit that target yet. But where is our stop on this? Well, our stop, we placed it here, is probably down below the 38, below the 30-day moving average. So what we might want to do on this is say, hey, our low here yesterday was 120.44. Let's move our stop up to 118 because on AU, on Anglo Gold, we are up over $600. Like, that is huge, my friends. But this is an unrealized gain in our example account. So what the market giveth, the market can take us away. And if we don't want it to take us it all away, maybe we ought to batten down the hatches a little bit and say, well, hey, we could just take the money and run. Well, let me put it to you this way. Do you want it? Because we are, it's continuing to uptrend. Well, let's just leave it in, but let's tighten up our stop. I want to show you an example of tightening up a stop. So we're going to come to the monitor tab. We're going to come to AU. So here our stop is at 101.80. And if we're trying to protect some of our profit, what we're going to do is we're going to say, okay, we want to cancel and replace this, and we want to make that stop 118.03. Okay, so we're going to cancel and replace that order, and we are going to make it 118. So now what we're trying to do is we're trying to protect some of our profit. So 118.03. Looking at my notes here. So, it's a common thing we call ourselves retail traders, or that's what they call it in the industry. So we're moving our stop up to 118.03. And if it goes up by another, our stop is set just shy of this. If it goes up another $1, then, we take that money. And we're willing to, risk giving some of it back. Now, a stop loss doesn't guarantee that we're going to, get out at exactly that price, but that's what we're trying to protect. Okay? But we got out of this call on this day. It's like we've set up a little bull flag. Could we do another one ATR trade? Just short term. So somebody's asking why 118.03. So what I did is I looked at yesterday's low, which is kind of like the bull flag low, and I just knocked 2% off that. I said, okay, this low on this day was 120.44, and I multiplied that by 0.98. Yeah, we could have used a trailing stop. That would have worked. Yep. That would have been possible. So, but I gave you an example, and, this is your example account. You can, kind of do that however you like. Okay? So, but we're going to place a new one ATR call. And so we're going to look at this, and this is how we kind of set this up. So I'm going to switch my calculator to scratch pad. And we're going to come to the very bottom. Say, okay, AU, here's our one ATR, and I have ATR on the chart, and it's currently at 84. Okay, and I did this, 84. And then we're going to look at today's high. So our target is today's high, and today's high, if you just hover over this candle, we can see that today's high is 128.07. So we're going to add and somebody can check my math to make sure I'm not messing up, plus 584 is 133.91. And then our exit, if all does not go according to plan, because we have some trades in our account that have not gone according to plan, 124.93 minus 584. And that equals 119.09. Okay, so we're going to come to our trade tab. We are going to come out and look at this money strike, and we are going to buy a single. And we're risking how much? We're risking $540. I'm going to make this a market order. I'm going to click the disappearing, reappearing sprocket. And this is where we're going to put our conditions in. Now, I always put the target first. And, it doesn't really matter, but it's just, or routine, 133.91, then 119.09. And we're going to save that. Now, how many contracts are we going to do? We're just doing one. And why are we only doing one? Because we could, we're paying $515 for this thing. We could lose all of it. Now, it's not our intention to lose all of it. In fact, it's our intention to make money. If we didn't think this was going to work, we wouldn't be placing the trade. But it's possible that we could be wrong. So this is our one ATR target. They're in the hole. Oh, yeah, maybe we should be going out to April. Sorry, but he made a really good point there. And that we should be going out to April because this is only 21 days. And even though we think it's a short, we're expecting to only be in this a couple of days, time decay is going to be eating our lunch. So we're going to have to come out here to the 140. And so why are we doing this? We're doing this because we can't afford the at-the-money strike. And this has a wide bid-ask spread. So we've got 36 contracts here. So what we're going to do is we're going to see if we can get filled close to the mid on this. Otherwise, we just can't place the trade. So we're going to do our buy single. And the mid is at 80. So I'm going to close that. So we're going to see if we can get filled around that 90 maybe, close to the mid. And then we're going to make this a single order, first trigger sequence, because we really want, even though we're not intending to be in this long, we don't want time decay eroding our profit than need be. See, together we are stronger. So whoever mentioned that, thank you. Okay, 133.91. Because even though these are just example trades, we're trying to, teach a man to fish here and to have a better understanding of why they might choose a certain strike or why a certain expiration date, all of that. Okay. So 133.91 is our target. If it goes at or above, 119.09 is our exit. And how much could we lose? We could lose this entire amount. Now it's saying our profit is infinite. And it's not giving us a break even on this, but yeah, Riceberg is saying together we are stronger. But it's got to go up by $5.90, one would assume. Break even isn't something that we discuss actually in this class. Yeah. So this is our 1 ATR target, 133.91. And then if by the end of day Monday this hasn't hit our target, we'll go in and we will tighten up our stop. And so let me just bring up our Greeks here. So we can see in April, our theta is 10 cents a day on this. So we're losing 10 cents a day on this just by the passage of time, including tomorrow and Sunday. But if we come and we look at March, we're losing 15 cents a day. So 50% more. Okay, so that's that one. Okay, so we've moved up the stop on Anglo Gold. We've placed a new trade on Anglo Gold. So kind of sticking with our gold theme, let's come over and look at Newmont Mining. So in Newmont gold mining stock, I'm actually from a little gold mining town about, 400 or 500 miles north of Toronto. Think Arctic watershed, like it really is. I should post a picture. Went home like all the way up to this little town called Kirkland Lake where I was born a couple of years ago. Yeah, anyway, I digress. So why might this be an interesting stock to look at and why now? Well, it just had earnings. And, it beat to the tune of 25% on the bottom line, what the estimates were. And then if we come over and we look at not live news, what are the analysts? And it's not like the analysts are necessarily right. But, Bernstein upgraded from 121 to 157. CMO 145 from 140. And this cracks me up. So TD Cohen went up to 160. It's trading above that, went up to 120. It's trading above that now. Hello. UBS to 160 from 150. But the net of it is, it seems to be pretty bullish, right? It seems to be a pretty bullish, that's how the analysts are looking at things. And then when I look at the chart, given, we're chart people and we're thinking we might be interested in placing a trade here, you might say, well, didn't it move up too much? And you might say, well, maybe it moved up just enough, to be considered a diagonal resistance breakout. And so, we could do a swing trade with a stock, up to that, say, 134.50. And $4 on 130, it's not nothing. So let me just bring up my calculator again. So if I looked at $4 divided by 130 as a percentage, if we're paying 130, it's in the neighborhood of 3%. We've got $11,000 sitting here in cash doing ding-qua-qua. So, maybe we could put it to work and buy some shares of stock. Well, how many shares could we buy? We can't buy that many. We can only invest up to 5,000. Well, you could say, well, if I switch my watch list to a calculator and I say, well, I've got $5,000. If I divide that by 130, get an estimate, we could buy 38 shares. So, and if we made $4 a share, that would be a base hit. Yeah. So somebody's asking how I draw the broke line. So I just did a little video on that. And you just, like when you draw a line like this on your chart, or you draw a line here, because I'm going to put a line here because this is going to be our target. And so what I did, so when you come in, working on a little portable monitor here. So I want to change that to say 134.50, was it? And this is going to be my stock target. So I'm adjusting this, but what I created as a default, I made the line blue and I made it dotted and I made it a little wider so you guys can see it. And then I saved that as a default. And I want to show the price on the right, and I save that as part of a default also. And then when I come in and I put the stock target and I say show it on the right, then that's just something I customize when I place a trade. And so this is a swing trade. Okay. Now, could we do a trade with a Fibonacci target? We could do that as well. So you can kind of do it either way. So you could do it with a swing target. We could buy a call and have a swing target, and then we could buy stock and have a Fibonacci target. And what would a fib target look like? Well, we'd come down here to our drawing tools. Let me just check on my time. Minutes. Come down to the bottom. So our fib target might be here around 150.61. Like maybe we make it 149.50. We haven't discussed the stock yet, but yeah, good. That's a good thing to bring up as well. So if we did the stock, and I'm changing my mind here, and let's make this. So this is going to be a little longer term trade. So if we buy our 38 shares and we make that our stock target, now where might we put a stop? Well, I'm going to come up here. I'm going to edit this. Forget. We're going to make that 149. So that's going to be our stock target. I'm now going to get rid of this because it kind of clutters up the chart. So we're going to come here to the trade tab. We are going to right click up here because we're buying stock with an OCO bracket. And just before we fill that out, now where might we put a stop? Well, we might say, hey, this has been acting as a support level down here. This 30-day moving average. So if I come to 121.45, which is our 30-day moving average, and we go 2% below that, could be 3%, it's up to you. So 38 shares. So 121.45. 0.98. Now you might say like, hey, I don't want to give it that much room. So that would be 119. But the challenge, if you don't give it enough room to move, it could pull back, nick you out on a wick, and then go up and hit your target. And then your petunias are really frosted. It's so annoying. But if we come here, and I know this is a stock trade that we're looking at, but I'll show you once we're done. I kind of look at it. So we're going to say, okay, this is going to be 119, our stop. I said again, 119.09. $19.09. Our target on this is going to be, no, just a minute. 119. Our target is going to be 149. Yeah, there's a dividend coming, so we'll get paid a dividend on those stocks, and we'll expect the stock to pull back by 26 cents. We are not going to be surprised if we see Newmont pull a little. And then our target here is going to be 149. So we're not expecting to be in and out of this in a hot minute. This is it's not a long-term investment, but it's longer term than, the one ATR trade we just placed. So these, then we've got to change our quantity. And our quantity is going to be 38. I think it was 38. And then, so I've changed our firecracker into a paper clip, and then when I click anywhere on these three lines, it'll line them up. So are we under 5,000? We're under 5,000. We're risking $11.53 a share. So we may want to do the math and say, okay, 11.53, get my calculator going. 11.53 times 38, that's 438. So we're still okay. We're still under that, we're honoring our position sizing rule, and this is a fib target. Oops, not a February. It is a target we're setting in February for a fib target. And this is NEM. Okay, now with the options, if we wanted to do a swing target, we're going to come out not to March because of the time decay issue. We're going to come out to April. And our choice is going to be based on what we can afford. So we're looking here, this 440 to 480, because we could lose all of it. And you might say, but our delta on that is 33. Well, yeah, our delta on that is 33, but we're paying almost half what we would be paying on the at-the-money strike. And this isn't a percentage. This is like if the stock goes up $1, the value of this option goes up by 33 cents on a $4.40 option. Okay, so we are going to buy, and our swing target, let me just see that again, 134.50 is our swing target. We are going to buy some with an OCO bracket. And so this one is going to be a market order based on the price of the stock. So this, we're going with the swing target, 134.50. 134.50. And then this, with a swing target, the way our example trading plan will read is that if this loses half its value, we're out on an option. So if this goes down to 240, which is how we got stopped on the FCX trade, and we're going to, take our money, lick our wounds, and live to trade another day. Is somebody saying, would you buy the 50 Delta? I'll talk about that Monday, Barb. She's saying, if it was in our snack bracket, would we do that? And sometimes I just run the numbers, and the percentage return can be higher on an out-of-the-money option sometimes. And so your potential gain is higher as a percentage on sometimes the more out-of-the-money strikes. Okay, so somebody's asking if I can go over. So this is a long call. So we're buying a call because we're bullish, right? Right. We want to exit when it goes above 134.50, and it's currently trading at 130.62. So does that make sense? That makes sense. Or if it loses half its value, how much could we lose? This entire amount? And this is a swing target. So somebody asked, how did I come up with this swing target? And this is, our previous high was 134.88. And so I just simply said, hey, when this gets back up to the previous high, let's just take the money and run. And I just knocked a few pennies off it and said, okay, so I've drawn my line. I'm going to come in, edit, and say 134.50. And this is our swing target. Yeah. And you don't have to put these on. I even do this in my own personal account, to be honest with you, so that when I'm looking at my positions on a daily basis, I can see what I'm heading for. And then if something is really close, I can go back and look at it and say, hey, this is like 20 cents away from my target. Like maybe I just take the money and run. Okay. Now, I know you guys wanted me to look at Netflix. At Netflix, we're close to our max loss. That stock gapped up today. So we'll discuss that on Monday. But this is one of those ones where we're grateful that we position sized appropriately, because this is one that didn't go according to plan. But we'll talk about that one on Monday. And we'll also talk about the Boeing trades on Monday. If you missed last Monday's class, we already closed out the long call on Boeing. We have a stock position on Boeing. And I, a conversation with myself this morning, and it's like, this is not going according to plan. So on Monday, if this is still looking like this, we'll close out the other two positions, okay, in this example account. So when there is a survey, and today there's a survey, one of the questions I get asked often is, will you review the trades at the end of the day? So we did a long call on Anglo Gold, AU, and a long call on NEM, and then we placed a stock trade on NEM as well. Okay, so more to review on Monday. We only have 45 minutes every class, guys. So as we wrap, here's my ask of you. Please hit the like button. It helps move things up in the trading algorithm so more people can find this content on YouTube. Subscribe to the channel if you haven't already done that. Follow Mike Fairborn and I on X, Mike Fairborn CS and Barb Armstrong CS. Mike has been hanging out in the chat, providing you guys with lots of additional content and answering your questions as we went along. So we want to thank Mike for that. And then there is a survey in today's chat. So if you're with us live, if you click on that link, there's two questions. 1 means I hated it, 10 means I loved it, and then there's everything in between. If you'd like to, you can put in comments. My promise to you is if you fill it out, I will read each and every comment. So will the management team. And so if there are topics you'd like me to cover in upcoming classes, just let me know. Otherwise, have an awesome weekend. If you're here in San Diego, would love to meet you. Come on up and we can take a picture together and have a chat. And then, I will see you for the next installment of Trading a Smaller Account on Monday. Have a great weekend, everyone. Get out there and hug someone you love and make it count for now.